A lessee signed an 8-year lease of 10 vehicles with a lessor, for a payment of $1 million at the end of each year. The interest rate implicit in the lease cannot be readily determined. The lessee's incremental borrowing rate was 7%. Starting from year 4, the lessee and lessor amended the payment terms in the original lease, where the lease payment became $900,000, payable annually for the remaining lease term. The lessee's incremental borrowing rate at the beginning of year 4 is 6%. Account for the original and the modified lease. Let's account for the original lease. These are the schedules for the calculation of the lease liability, and the right-of-use asset on the commencement date, in addition to the lease amortization schedule. The lease liability at the commencement date is the present value of the periodic payments of $1 million, discounted over a lease term of 8 years with a discount rate of 7%, which is the lessee's incremental borrowing rate on the commencement date. And here, the right-of-use asset includes only the initial measurement of the lease liability on the commencement date. Starting from year 4, there was a reduction in the lease payment for whatever reason, and the revised lease payments became $900,000 starting from year 4, and the revised discount rate as of the date of modification was 6% for the remaining lease term. Let us apply the two conditions for this modification to see how we should account for it. The first condition: does the modification increase the scope of the lease by adding a right to use an additional asset? Here in the example, the modification reduces the lease payments, and does not increase the scope of the lease. So, the first condition is not satisfied, and the modification is accounted for, by adjusting the original lease, and not as a separate lease. This is done by computing the revised lease liability for the modification, which is the present value of the revised lease payments, over the remaining years in the revised lease term, using the revised discount rate at the date of modification. As for the right-of-use asset, the modification falls under the category of other modifications, and in this case, we need only to adjust the right-of-use asset, with the same figure of the adjustment done to the lease liability. So, here is the template for the lease liability calculation. This is the revised lease payment, the revised discount rate of 6%, and the remaining lease term is 5 years starting from beginning of year 4, which is the date of modification. Insert the discount periods for the remaining years starting from year 4, the revised periodic payments, then the present value factors using the revised discount rate of 6%, and this is the revised lease liability as of the modification date. Let us calculate the revised balance for the right-of-use asset. This is the lease liability balance just before modification at the end of year 3. And this is the revised balance that we just calculated here. And the difference is the adjustment that should be made at the end of year 3, to reduce the carrying amount of the lease liability to the revised balance. This is the carrying amount of the right-of-use asset before modification at the end of year 3. And by crediting it with the same adjustment figure here, we get the revised carrying amount for the right-of-use asset at the date of modification. And this is the journal entry for that adjustment. Now, let us complete the lease amortization schedule here. Nothing is changed in the first 3 years before the date of modification. Insert the revised balances for both the lease liability and the right-of-use asset, and they are also the beginning balances for year 4. The interest charge starting from year 4 is calculated using the revised rate of 6%. Insert the revised lease payment of 900,000. And you already know how to complete the remaining calculations. This is the end of this example and this lecture. By the end of this lecture, we have come to the end of our discussion of the lease modifications.